Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite U.S. Market Update. Well, after a period of consolidation following last week's big volatility, the markets became volatile once again today in Tuesday's trade in the U.S. markets. You can see the downward break here. If we take a look at the charts, you can see that we had a little bit of a consolidating triangle here, nothing real significant, but it was well formed for as small as it was, and then the breakout today. If we had the Elliott Wave on, you notice that we've had a relabeling of the Elliott Wave count, which is quite interesting. If we use the feet to walk back, you can see that, remember, we had the Elliott Wave 3. We were looking for, at some point, a correction down to a Wave 4, and right around where that triangle was, where the consolidation was right at the Wave 4. But with the breakout that occurred today, that nullifies that and causes the pattern to be relabeled, and now we have a series of ABCs. Very interesting that now Elliott Wave is not necessarily calling for a new high in the SPX. Now, it doesn't mean it can't happen. We have these ABC patterns. You can have upward zigzags that can form from this, but just this overall pattern before has changed, and that's a major consideration for your trading, is the fact that not necessarily is the U.S. market going to go up and make those new highs. That may kind of tie in with the thesis of higher interest rates, looming inflation, etc., that's going on. Those things all kind of make sense, but when you have a major relabeling like this, it's definitely something that you want to pay attention to with your own trading. So the breakout of that triangle broke below that Wave 4, so the Elliott Wave then relabeled because that pattern is no longer valid, and the dynamic nature of Elliott Wave is one of the things that I like most about it, is that it changes and adjusts with the market. If we take a look at the SPY, we want to see if there was some volume involved in this, and there was, and maybe a telltale sign here, for some information, is while we were going through this consolidation right here, forming this triangle, come down and take a look at what was happening with the volume. Volume was actually increasing while the market was consolidating. That's the exact opposite of what usually happens. Usually when you go through a consolidation, the volume tapers off, and so that would have been the exact opposite direction, where you would have seen volume coming to the downside. So that may have been a tip of the hand there that the market was getting ready to make a significant break, and that the fact of the increased volume was that it was going to break to the downside. It's just very unusual to see that, to see volume actually increasing during a consolidation. If we take a look at the VIX, a big breakout of the VIX, we also had a triangle here. And that kind of coincides. You know, the VIX is the volatility index for the S&P, so if you're going to have a triangle in the market itself, not unusual to have a triangle in the VIX either. But when we put the Elliott Wave on the VIX, that looks a bit ominous to see that we had, of course, the upside breakout in the VIX, which corresponds with a downside breakout in the markets. But now we're looking for a higher target with the Wave 5 from the larger trending Elliott Wave 5 pattern all the way up around in the low 30s. So what that's trying to tell us is that get used to the volatility. It's probably going to be here for a while. If you're an options trader, you love it. That's what we want. We want to see the markets move. If you're long only, or you're in some sort of fixed investment, a mutual fund, superannuation, whatever, where you're in equities, probably not what you want to see, due to the fact that if you don't have them protected, you're going to be susceptible to any further downside. Now we'll just see how that plays out. You know, it could be a one-day spike that gets up there with the VIX. Who knows? But it's just interesting that it certainly appears from the VIX that we are looking for more volatility to come. Looking at TNX, here's what I wanted to show you as far as a flag pattern. I prefer the Elliott Wave triangles because that's part of Elliott Wave. There are also pennant patterns and flag patterns that people watch for breakouts. And here's an example of one, so we'll just give you an idea of what it looks like. So you have like the flag post there, and then you have the consolidating triangle, which forms the flag part. So that's what a flag looks like. And again, we break to the downside on interest rates, which is quite interesting to see that, again, looking like money is flowing into bonds as a safe haven. That's not that unusual either, but it certainly isn't anything that is predicting new highs anywhere in the short order. So again, things seem to be lining up that maybe there aren't going to be any new highs in the U.S. markets for a period of time. We'll certainly keep monitoring these and report back to you each week, but that's what it's looking like now. Things are starting to line up. It's always confusing when the corresponding indicators that usually work in sync get out of sync, and then it's hard to figure out where things are going to go, but things are as they should be as far as syncing up between the bond market and the equities market, as well as volatility. They all seem to be on the same page right now. Looking at case studies, MasterCard just continues. It did trade a little bit lower today, but not that much, and that wave 4 stays in place with just the 23.6% Fibonacci retracement there, and moving back to the upside is still a possibility if the market calms down. Now, if the market does begin to fall apart even more than it has already, then markets tend to drag the strongest stocks down last. So this could be, they usually say that the market corrections don't end until the generals fall, and the generals that they're talking about are the strongest stocks. And MasterCard's been in this very strong wave 3. As you can see, it did go into the wave 4 correction, but even into today's downward move, unlike the market itself that broke that wave 4 low, MasterCard did not. So this upward pattern is still in place. So that's what we do. We trade the technicals, we trade the patterns, we don't trade what we think is going to happen. We trust the Elliott Wave signals that have been so good to us for the entire year. Looking at Activision, here we did break. There was a little bit of a triangle there. We put the Elliott Wave pattern back on. We broke just below this level right here, and that was where our wave 4 was. And when that occurred, that was an exit. So our exit was on this trading day here. So we exit there and take a small loss. So there was our wave 4 bottom, and we traded just a couple dollars below that. Again, the whole key to this: take quick losses, quick short losses, and then let your gains run and hit their targets. Now, you do have a choice of whether or not you want to take gains a bit sooner before they hit their targets. That's up to you, but again, you can see we have relabeled here into the ABCs, and that's what happens when you break a wave 4. So if we go back and look at the pattern previously, there was the wave 3, the 4 again set up here. That was what we were expecting to see the bounce from. It broke that, so we're out. So a small loss there. MasterCard stays in place. We talked about Baidu last week as a wave 5 to the downside, and the expectation of potentially an extended wave 5. And if we draw the fib extensions here, there's the 100% level. Now, last week we had bounced up off of the 61.8% level, and when you are going into an extended Fibonacci, either a retracement or an extension, but the extension of the current move, in this case, as we put the Elliott Wave on, it's the wave 5. When you go through that, and I'm just going to take this back off so you can see it real quick. When you're going from one fib level to the next, you go back and test the previous one. Those are the rules. So it went back up, it tested the 38.2% level. So what I'm talking about here is there was the low, in the wave 5. It went back up and tested that 38.2% level. Now we're back down and we're testing once again the lows. So we had a debit spread, put debit spread on this position that is already profitable by 15 points. Now this is where what I was just mentioning as far as you have to make the determination on your own. We do have an alert service here in the U.S. that we send out on what we're doing, but at this point you have to make the determination on your own on whether or not that's enough gain for you. Do you want to take the profit and just close the position out now, or would you want to wait and see if indeed we get that extended wave 5 to come all the way down to the 100% extension? Now remember, and I want to be very clear here, it's done what it was supposed to do. It's reached this wave 5 target. It's hit the appropriate Fibonacci extension, a 38.2% correction, hits a 61.8% extension. It's done that. It's done everything it's supposed to do. So if you're staying, then you're looking, based on everything that's going on in the markets, etc., for this to continue down. Now maybe you want to look at another indicator to give you some guidance on the strength, and I like the DMI, as you know, and you can see that the ADX, the black line there, is still moving to the upside. It's still showing that there is good strength in this move, and that would lead you to believe that there is a good chance we will see an extended wave 5. Now you'd want to protect your profit if you decide that you'd want to stay and see if it comes all the way down there. You would certainly want to have a tight stop and not give back the profits that are in the position already, but maybe let it go and see if it comes down and hits that, which the indications are that that there's a good possibility. But again, no shame in just taking a nice profitable trade and moving on if that's what you would like to do in your own trading. So that wraps things up. The market for this week, the market is fascinating, a lot of fun when we have this kind of volatility, things moving fast and furious. And as an options trader, you live for these times. This is when you make your big money, when the market gets volatile. So I hope you've had a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.